Welcome to the Deep Dive from Talk Tickers, your essential guide to distilling the most critical insights from earnings calls. Today, we're plunging into Chunghwa Telecom's second quarter 2025 operating results.
Yeah, and we have a remarkable story to unfold from this call. It really showcased not just a period of significant growth, but a strategic pivot that's truly repositioning the company.
Right.
You want to understand how they're navigating this, evolving landscape and what it means for their future trajectory.
Absolutely. And the market certainly picked up on that positive momentum, didn't it? Signaled a strong quarter. So let's cut straight to the core.
Let's do it.
Let's uncover what truly drove this standout performance and maybe why these particular results might be more significant than they first appear.
Okay.
Kicking off with the headlines then, Chunghwa Telecom delivered, an exceptional second quarter. They reported GAAP EPS of NT $1.31. That's a solid increase from NT $1.27 year over year.
Right, and on an ADR basis, that EPS came in at $0.43, which beat the consensus by a cent.
Not just good numbers, they actually represent the highest EPS for a second quarter in 9 years.
That's the key point. And what's truly impressive, I think, is that revenue reached a 10-year high for a second quarter.
10 years, wow.
Yeah, hitting NT $56.73 billion. That's a robust 4.8% increase year over year.
Okay.
Operating income also saw a solid bump, rising 5.2% year over year to NT $12.54 billion. And the operating margin, it improved by 10 basis points to 22.1%.
So it's not just about revenue growth, they're managing costs too.
Exactly. This isn't just good numbers. It reveals a company aggressively executing, a lean operational strategy. They're finding efficiencies even as they scale, which is, frankly, a rare feat for a legacy player like this.
And EBITDA followed suit.
It did. Increased 3.5% year over year to NT $22.58 billion, with a margin of 39.8%.
Okay.
And management explicitly stated that all key financial metrics, revenue, operating income, net income, and EPS, exceeded the upper end of their internal guidance.
For both the quarter and the first half.
For both, yeah. Which truly underscores, robust operational execution.
Right.
And indeed, this growth reflects continued operational efficiency and healthy cash generation across their core business too.
So the first half overall looks strong then.
Very strong. For the first half of 2025, revenue grew by 3.2% year over year, and net income increased by 3.9%, totaling an EPS of NT $2.57.
And the drivers were consistent.
Pretty consistent.
Yeah.
Gains consistently driven by that ongoing growth in their internet data center, or IDC, and cloud services, alongside stable performance from their subsidiaries.
So these numbers aren't just strong, they really hint at a deeper transformation within Chunghwa Telecom.
That's right.
Let's really unpack how this legacy player is aggressively pivoting, like you said, to become a key digital infrastructure player, starting with what truly drove those impressive Q2 revenues.
Well, the strong revenue growth was primarily fueled by robust momentum across the board, but especially in the enterprise ICT segment.
Okay, ICT.
Yeah, enterprise ICT revenue surged by a remarkable 27% year over year, and recurring ICT revenue was up 25%.
27%, that's not just a bump.
No, exactly. It signals a significant and successful shift in their business mix. It really establishes ICT as a genuine second growth engine for the company.
Okay, and what's particularly compelling when we dive deeper into that enterprise ICT segment are these specific growth areas. Can we break those down?
Sure.
First, IDC revenue grew 40% year over year.
40%, driven largely by demand from financial and high-tech sectors. And that actually accounted for the largest share of absolute revenue growth.
Okay, biggest chunk of the growth. Then we have AIoT, artificial intelligence of things.
Which absolutely soared, up 71% year over year.
71%. Wow, what drove that?
Propelled by smart energy projects, surveillance, smart buildings, transportation projects. A real mix.
Got it. And cloud?
Cloud services also saw a 40% increase year over year. Similar strong demand again from financial and high tech.
Okay, cybersecurity.
A bit slower, but still solid. Rose 11% year over year.
Right. And notably, that 5G private network deployment.
Yeah, get this. An extraordinary 150% year over year revenue increase.
150%.
Including a significant project for the National Cultural Center and Exhibition Hall. It's a clear indicator of where that high-value growth is really coming from.
That's a fascinating breakdown. But it raises an important question, right? How are they actually securing these high-value, specialized deals?
Good question. Well, we learned they secured new ADC, that's AI data center-related construction contract awards, exceeding $81 billion just during the quarter.
81 billion, huge number.
Huge. And they also signed a contract, for example, to assist a leading petrochemical company implement AI-powered image recognition and automatic optical inspection.
Okay.
And that's a solution they expect to expand to other chemical-related sectors. So these aren't just lucrative contracts. They leverage their specialized expertise, things like air and liquid cooling solutions for data centers.
Right, which is critical for AI.
Absolutely.
Right.
Positioning them as an indispensable partner in the whole AI build-out.
Okay, so beyond ICT, which is clearly booming, how did their core telecommunication services hold up? Because often you see that side slowing down for traditional telcos.
Right, but here they held strong. Mobile market share actually rose to a new high of 40.7% as of June.
New high, okay.
And their 5G market share maintained a leading position at 38.7%.
Still leading.
Yep. Mobile service revenue grew approximately 2% year over year. And ARPU, average revenue per user, saw a modest quarter-over-quarter increase.
Okay, what's driving that ARPU increase? Because that mobile market must be pretty competitive.
It is. The ARPU improvement was primarily helped by, well, more users upgrading to 5G.
Okay. Higher price point.
Exactly, which naturally brings a higher price point. This also contributed to an increase in the average monthly fee by about 38% for mobile users overall.
Got it. And fixed broadband.
A similar story. Revenue increased 1.8% year over year, and ARPU rose approximately 2% year over year, or about an additional $14 per month.
What supported that?
Successful strategic bundle plans. Nearly 70% of adapters opted for plans with speeds of 300 megabits per second and higher.
So people are taking the faster speeds.
Definitely.
Yeah.
Including impressive growth in the 1 gigabit per second subscriptions. Even their video business, believe it or not, saw subscriptions grow 6% and revenues 5%.
Really? What's driving video?
Fueled by live sports and exclusive content. Things like popular Taiwanese dramas and Korean variety shows. And they mentioned consumer cybersecurity services also recorded 20% year-over-year growth.
Okay, a lot going on. Now, looking internationally, we did see that revenue from international subsidiaries declined 41% year over year. That looks like a big drop.
It does look big, but it's crucial to understand the context there.
Okay.
This was primarily due to project-based fluctuations. There was a one-time revenue recognition in the U.S. and Japan in the prior year that didn't repeat.
A tough comparison then.
Exactly. More importantly, the Southeast Asia market actually delivered double-digit revenue growth.
Okay, that's key.
Yeah, due to continued demand for ICT services, they secured new solution contracts in places like Vietnam and Singapore. So it's a nuanced picture internationally, but there's underlying strength in those strategic high-growth markets.
Right. And if we connect all this back to the bigger picture, it's clear they're making these strategic investments. You mentioned the sea, land, and sky strategy.
Absolutely. It's crucial for enhancing network resilience and capturing future opportunities, really solidifying their position beyond just being a domestic telecom.
So let's break that down. Sea.
For sea, the official launch of the SJC-2 submarine cable back in July. That isn't just an upgrade, it's a critical strategic move.
How so?
By enhancing their network backbone across the Asia-Pacific region, they're supporting bandwidth-intensive applications, think AI and cloud computing, and it cements Taiwan's role as a high-speed data nexus.
Okay.
They also announced investment in the new AUG East submarine cable, which is expected to start bringing in revenue after its completion in 2029, so long-term planning.
Right. And sky.
For Sky, Chunghwa Telecom secured an exclusive commercial license for OneWeb LEO low Earth orbit services.
Satellite services.
Exactly. Extending satellite services to broader uses like in-flight Wi-Fi for aviation, applications for the maritime industry. It significantly expands their reach beyond traditional ground networks.
Interesting. And land.
And for land, they partnered with NTT to successfully present the world's first cross-border co-performance using IOWN, the All Photonics Network.
Okay, what did that show?
It demonstrated ultra-low latency applications between Taiwan and Osaka, really pushing the boundaries of network capabilities. Very cutting-edge stuff.
These sea, land, and sky initiatives are clearly looking long-term, big investments. How much are these weighing on their near-term financials, though? And how quickly do you expect to see returns that justify that kind of ambition?
That's a fair point, and we'll get to capital allocation. But just before that, it's worth noting the significant recognition they're getting.
Ah, yes, the awards.
Right. Beyond the financials, they received the highest MSCI ESG rating of AAA in May. They're the only Taiwan telecom to achieve this.
AAA, that's top tier.
Top tier. And they earned the 2025 Taiwan Data Center Service Competitive Strategy Leadership Award from Frost Sullivan, specifically for their AI-ready data center capabilities.
Okay.
Plus, recognition from the Taiwan Stock Exchange as one of the top 5% of listed companies for corporate governance.
So these aren't just, shiny trophies.
Not at all. They're strong signals of operational excellence, strategic foresight, and a robust commitment to sustainability and ethical practices. And that's increasingly important to investors and clients alike.
Yeah, absolutely. And that positioning is critical when you consider the broader industry backdrop, isn't it?
Definitely.
Taiwan firms dominate the global AI server supply chain, and the local network equipment market saw, 16% year-over-year growth in Q1 2025?
Right. So Chunghwa Telecom's focus on AI-ready data centers and advanced ICT solutions directly aligns with these powerful macro trends. It allows them to truly capitalize on Taiwan's significant role in the whole AI and data center build-out.
Okay, so we've seen how they're fueling growth. Let's shift gears slightly back to your question about financials. What's the engine behind all this ambition? I'm particularly curious about their capital allocation, and you mentioned that recent dip in free cash flow. What does that tell us?
Right, the free cash flow. It's fascinating because that decline, a 6.8% year-over-year drop, was primarily due to front-loaded 5G and 4G equipment deployment.
Timing of spending.
Exactly. It led to an 11.9% increase in capital expenditures for the quarter. But here's the key thing. Management clarified that full-year mobile-related CapEx is actually expected to be lower than in 2024.
Lower for the full year. Okay, that's important context.
Very important. It shows disciplined planning and a strategic approach to capital allocation, not, uncontrolled spending.
And their balance sheet.
Rock solid. Their net debt to EBITDA remains at effectively zero.
Zero net debt. Wow.
Which underscores a very strong financial position and a prudent capital structure. It gives them ample flexibility for future investments in fiber, 5G, data center capacity without compromising their balance sheet health. Their current ratio also remains above 100%, highlighting healthy short-term liquidity.
Okay, so with all these strategic moves and these disciplined financials, what does this all mean for the full year outlook? Did they update guidance?
They reaffirmed their 2025 full year guidance ranges.
Okay, so holding steady, what are those numbers again?
Revenue projected between NT $232.74 and NT $233.74 billion.
Okay.
EPS between NT $4 and NT $4.82.
Right.
And EBITDA between NT $86 or 4 cents and NT $87.46 billion, with an EBITDA margin expected between 37.0% and 37.4%.
Exactly. And the early signs look positive. That raises an important question for any investor, doesn't it? Can they maintain this momentum?
Exactly. And the early signs look positive. Monthly updates already show record revenue in June and July.
Okay, so strength's continuing into Q3.
Seems like it, indicating continued strength. The strategic narrative for Chunghwa Telecom is clearly evolving,
How so?
It's shifting from a company focused primarily on, say, dividend stability, their traditional telco model, to one emphasizing dynamic growth via digital infrastructure.
Right.
Positioning the company to really capitalize on Taiwan's significant role in the AI server and data center supply chain. This structural shift from a utility-like play to a growth-oriented infrastructure enabler is really a key takeaway from this call.
And the market seemed to agree.
It certainly liked what it heard. Following the earnings release, Chunghwa Telecom's ADR on the NYSE saw a modest positive reaction.
How much?
Increased about 1.5%, closing at $45.05. And that was on above-average trading volume.
Which aligns with the message of exceeding guidance and strong execution.
Precisely, especially in that accelerating ICT segment and the infrastructure wins. And if you look over the last year, CHT's ADR has returned an impressive 18.4%.
Okay, 18.4%. How does that compare?
It significantly outperforms its benchmark, the EWT Taiwan ETF, which returned 10.0% over the same period.
Right. So that really highlights their successful pivot, moving beyond just traditional telco services towards becoming this robust digital infrastructure operator.
Exactly.
All right, listeners, it's time for our This Is Not Financial Advice segment. This is where we pitch an outrageous but plausible trade idea strictly for entertainment and thought-provoking purposes.
Okay, so given Chunghwa Telecom's reaffirmed full-year guidance, that rock-solid balance sheet with virtually zero net debt, And that remarkable 150% growth in 5G private networks.
That spicy number.
That spicy number. We're eyeing a potential arbitrage opportunity, but it's rooted in more of a macro-level divergence.
Okay, Centrigas, what are we calling this play?
We're calling this the Global AI Infrastructure Nexus play.
The Global AI Infrastructure Nexus play.
All right. What's the idea?
The idea is this. Go long CHT, Chunghwa Telecom, but simultaneously establish a short position in a basket of traditional, slower growth, dividend-focused European incumbent telcos. Ah, the pairs trade idea. Long CHT, short European telcos.
Exactly. Specifically targeting those that have been, let's say, hesitant to aggressively pivot into enterprise ICT and digital infrastructure like Chunghwa has.
Okay, what's the core thesis behind that?
The thesis is pretty simple, really. CHT, with its AI-ready data center capability and those strategic subsea cable investments we talked about, is transforming into a critical node in the global AI supply chain.
Right.
It's capturing value far beyond that of just a mere telecom. Its exposure to Taiwan's booming AI server build-out, combined with its network resilience initiatives. It positions it almost as a growth stock masquerading as a utility.
Okay, growth disguised as safety. And the European side of the trade.
Well, the European counterparts, by contrast, are often more susceptible to regulatory headwinds. They have legacy infrastructure costs weighing them down, and generally a slower pace of digital transformation.
Right.
We believe that will compress their multiples relative to CHT's accelerating growth profile.
So you're betting on the fundamental divergence of two worlds. The agile digital infrastructure enabler, CHT, versus the perhaps stagnating legacy provider in Europe.
Exactly. It's a clean, diversified bet on the future of connectivity, essentially. But remember, this is purely hypothetical.
Absolutely. Not financial advice, just a thought experiment.
Okay, so just to summarize then, Chunghwa Telecom delivered an exceptional second quarter. They surpassed internal guidance across all key financial metrics.
Yeah, really strong performance.
And their strategic shift towards digital infrastructure, exemplified by that strong enterprise ICT growth and those significant investments in submarine cables, LEO services, it's clearly gaining traction. It's redefining their business model.
And with that robust balance sheet and continued operational efficiency, Chunghwa Telecom is indeed well-positioned, wouldn't you say, to capitalize on Taiwan's central role in the global AI and data center build-out. What really stands out to you from this deep dive into Chunghwa Telecom's latest results? For us, it feels like a clear blueprint for how traditional telcos can redefine themselves for the digital age if they make the right moves.
I agree. This truly highlights a company in transition. It's leveraging its core strengths, yes, but it's also aggressively pursuing new growth engines. It's not just adapting, it feels like it's actively shaping its future in the global digital landscape.
Agreed. A fascinating story to watch. That's all for this deep dive from Talk Tickers. Remember, this information is for educational purposes only and definitely not financial advice.
We hope you found these insights valuable.
Until next time, stay informed.